Hey guys, Dave Keller here with Market Misbehavior. I'm often asked about technical analysis and how that relates to momentum, particularly the momentum factor. A lot of academic work has been done on the momentum factor, and if you Google articles on the momentum factor, you'll find a lot of academic literature and broker research and other places where they talk about this momentum factor. Spending time with institutional investors, most quantitative models have a momentum factor, which is a way of measuring price trend and basically making sure you're allocating to the strongest stocks. So if that's what you're doing, and if the momentum factor works, how come the momentum factor ETF, ticker MTUM, is underperforming so poorly right now? Today we're going to answer the question, why is the momentum ETF underperforming? So in the course of my work, I'm often asked about ETFs in a lot of different ways, and particularly the Momentum Factor ETF, ticker MTUM, which is an iShares product, I'm often asked about because the way I describe my use of technical analysis and the way that I think you should use technical analysis is as a momentum-oriented investor to follow trends, a trend follower. And the idea with momentum investing is to lean into what's working and to lean away from what's not working. So it seems like there's an ETF, the Momentum Factor ETF, that is supposed to do that, right? It's supposed to lean into what's working, to allocate or over-allocate to stocks that are outperforming, and to lean away from things that are underperforming, to not allocate to securities or to stocks that are underperforming. So if that's the case, and if that works, then why is the Momentum Factor ETF underperforming right now? We're going to look at a chart of the Momentum Factor ETF. We're going to talk a little bit about how it's constructed, and we'll talk in particular about how the rebalancing effect, or when you actually update the holdings of the ETF, can have a huge impact on the performance of that ETF. Before we get to all of that, I just want to remind you, if you're interested in this sort of thinking about market structure, investor behavior, decision-making, charts, and technical analysis, that's all of interest to you. I hope you'll subscribe to my channel. It'd be great to have you along this ride with us. Also, give the video a like if you could. We'd very much appreciate it back. Finally, put a comment below the video. What do you think about the Momentum Factor ETF and its prospects for the remainder of 2021? A good opportunity or not? Let's get to the chart.
Okay, so here we're actually starting with a chart of the five iShares factor ETFs: Momentum, Quality, Size, Value, and Minvol. And there are many other factor ETFs that you could be following. The iShares group are the ones that I've followed the most often. And this is the chart that I use to just look at their performance over time. So we're looking at year-to-date performance of these five ETFs and the S&P 500 in black. So the S&P, using the spiders, is up about 16.5% year to date. The quality ETF, almost identical, 16.5%. Two of the factor ETFs have outperformed. The size ETF up about 17.5%. And that basically allocates more to the smaller stocks within the S&P 500. And the value ETF, which is the strongest performer year to date, up 20.7%. Quick aside, it's worth noting that the value ETF is the only one of this entire bunch it's actually making a lower high in the last couple of weeks. All the rest of them are actually making a higher high going into July. What's underperformed the S&P year to date? The MinVol ETF, which is up 10.5%. That stands for minimum volatility, which is basically a lower volatility, a less movement type of allocation. So it's allocating to stocks that have less volatility. Then we have the Momentum ETF, which is really the topic of this video, up 6.8%. Now, what is the momentum factor? The momentum factor, not just this ETF, but more broadly speaking, the momentum factor is allocating to stocks that have performed well and under-allocating or not allocating to stocks that have not been performing well. So the idea is to follow trends, which is arguably what I talk a lot about in my own work and a lot on this channel, is about momentum investing, about trend following, about leaning into what's working and leaning away from what's not working. So if that's the idea, and if this is an ETF that is based on a factor that my technique is based off of, my toolkit is based off of, how is this performing so poorly year to date? If it's allocating to the winners, why is it not winning? Here's what's actually happening. And let's look at a chart of Tesla to see why it is currently the biggest holding in the momentum factor ETF. So in MTUM, the number one stock is Tesla. And here's why. If you look at, let's take a snapshot at the end of December of 2021. What a momentum factor looks at is it basically has a look back period. Let's say it could be 12 months, 6 months, 3 months. It could be some weighting of those, like a 12-month and a 6-month and a 3-month, and it's an average of the three. There are a lot of different ways you could design a momentum factor, but it is having a certain look back period, and it's looking at the percent movements over that period of time. So if you look at the chart of Tesla at the end of last year, probably scores very well on a momentum ranking because it has outperformed the S&P dramatically, right? If you look at the year 2020, after the pullback in March, Tesla rallied significantly, on an adjusted basis, going from, under 100 here in March to almost 1,000, 900 here in January. So if you take the snapshot there, it's one of the better performers out of most of an equity universe that you would look at. You can see the relative strength at the bottom and see how the chart's consistently outperforming over that time period. So one of the strongest charts, one of the strongest trends, it would make sense that that's actually scoring pretty highly. But that's not actually when the Momentum Factor ETF did its look back. It actually rebalanced most recently in May. And what a rebalance is when you have a momentum factor and you have a look back period for certain, with the strongest and weakest trends over a period of time, you also have to set a frequency that you rebalance the holdings, because you have to, after a period of time, look back and make a new assessment of what are the strongest trends and lean into those. And you have to change based on emerging leadership and new trends. This ETF in particular only rebalances twice a year, and it just rebalanced earlier this year, about a month or so ago in May. So the problem is, if it takes the look back in May, it's going to allocate to the stocks that have the strongest trends from a look back period ending in May. So if anything changes after that in the short term, the Momentum Factor ETF is going to be pretty challenged. So the snapshot was done here in May. Even though Tesla had come off a bit, if you look over the last 12 months, 6 months, still was a pretty decent trend because it had appreciated so much on an absolute basis, right? The trend was so positive, it was still vastly outperforming the S&P over that period of time. So it makes sense that that would be one of the strongest holdings. Let's actually look at the holdings of the Momentum ETF right now. Tesla number 1, JP Morgan number 2, Disney, Berkshire Hathaway, Bank of America, PayPal, Applied Materials, Wells Fargo, Alphabet, and the other listing for Alphabet. Here's the kicker: 4 out of the top 10, 5 out of the top 10 or so are all in the same sector, financials. Actually, if you look at the sector weightings, 31% of this factor ETF, the Momentum Factor ETF, is currently allocated to the financial sector. What has not been doing well in the last 6 to 8 weeks? The financial sector. JP Morgan is one of the largest weights in the Momentum Factor ETF. You can see why it was included, because if you look in mid-May and you look at the look back period of 6 to 12 months, you can see that it's actually had a pretty good run if you're looking right at them. But what's happened since then is all the financial stocks have come off because interest rates have come down. The 10-year yield today, as we're recording this in early July, just got below 1.4%. And that downtrend in rates, the breakout in bond prices, is a huge headwind for the financial sector. And as a result, the financial stocks like JP Morgan and regional banks and others are all sort of struggling, especially on a relative basis. So basically the model allocated to the strongest performers, but that's changed. And from the moment it reallocated, basically that group, that sector, financials, have actually been struggling. So this actually illustrates one of the challenges of any sort of factor model, a quantitative model, or an ETF built off of a quantitative model, because it's only as good as the rebalancing is going to be. There's always a give and take between rebalancing more frequently. So why don't you rebalance once a month, once a week even, and just keep allocating to the best performers? Won't that get you into stocks that are working and get away from stocks that aren't working? Maybe, but the problem is you're going to start churning the holdings too much. And you have a way too high turnover, because every week you might have a new set of stocks you need to buy or sell, and all of a sudden the performance gain that you might stand to benefit from is going to be eaten up by the commissions or the trading costs, the slippage, and all of that comes with churning your portfolio. So the thing is, you need to keep your rebalancing to a limited number of times. Once a quarter, or in this case, only twice a year. And that means during periods of consistent uptrends, when something like the FANG stocks are just performing well and continue to outperform, a Momentum Factor ETF is going to do very, very well, because it's going to, the trends are going to persist, the trends keep going, and it's allocating to the strongest charts. But in a period of dislocation, a period of leadership rotation, and I would argue we're in the most rotational environment that I've seen in quite a while. If you think about the movement in the S&P, you made new highs February, March into April. But from the April high on, it's been much more rotational. It's been more about leadership rotation. The cyclicals coming down, the growth stocks working, charts like NVIDIA and others breaking out to the upside in the last couple months. All of that has changed since the April high. So again, this rebalancing for the ETF happened right during this rotational period. And as a result, a factor ETF like this is not going to do particularly well. One of my friends in the industry, Tony Dwyer, mentioned, he called it the indigestion rotation, market indigestion, something like that involving indigestion, which I think is a great way to describe what we're having right now. We had the big meal going up into the April high, and now it's sort of this indigestion period where we're sort of chopping around, churning around all these leadership themes. What is not included in the Momentum Factor ETF, if it's so overweight in things like financials, what is it not weighted in? NVIDIA, Facebook, Apple, Amazon, none of those are in the factor ETF, right? The Momentum Factor ETF. Alphabet is. That's actually one of the, arguably leadership names, growth leadership names that are in there. But all of the other ones that I just mentioned aren't holdings in the ETF. And if you look at May, when the ETF was last rebalanced, makes sense that NVIDIA wasn't included, right? It was basically flat for the last 8 months right before the rebalance. Wasn't really doing anything on an absolute or a relative basis, didn't really deserve to be overweighted in a Momentum Factor ETF. But then if you look from May on, it basically turned to the upside, broke out, and has continued on. So the Momentum Factor ETF is underperforming because of where it's allocated. Currently, it's allocated into the financial sector in a big way more than the S&P 500. So if that sector is underperforming over the next 4 to 6 months, the Momentum Factor ETF is most likely going to be underperforming as well. And if you expect interest rates to continue to remain low or continue to go further down, if you expect the yield curve to continue to flatten, that is certainly going to be a headwind for the financial sector and as a result for the Momentum Factor ETF. Does that negate the value of technical analysis and trend following and momentum investing? Absolutely not. I would argue it presents or illustrates the challenges of having a factor model and just allocating with some frequency to strong trends. The problem with it is it's only as good as the times when you rebalance. It's not going to be able to rebalance frequently enough, potentially, to catch up with a market that's in rotational mode. I would argue as an individual investor, as a financial advisor, you may be much better equipped to allocate based on price momentum and not be tied to a particular time frame. The ease or the benefit of a Momentum Factor ETF is you don't have to worry about reallocating. It does it for you. The challenge is it's going to do it on its own schedule, and it might not be market defined. It's more it's more market agnostic. It's doing it twice a year on a preset schedule. It has nothing to do with the actual trends in the market. I would argue the best way to run a Momentum Factor is to analyze the charts, analyze the trends, and be nimble enough to allocate to where things are working and when things are not, based on the trends and not based on a predefined time frame. So that is why the Momentum Factor ETF is underperforming.
So folks, that's the background on the construction of the Momentum Factor ETF, ticker MTUM. There are other factor ETFs that are out there. The iShares family are the ones that I'm most familiar with and that I followed for a while. And again, I feel like with any sort of quantitative model or ETF that is rebalancing, you have to remember that it is imperfect in that it is tied to a particular time frame. Something that's only rebalancing twice a year means, depending on the market volatility, depending on leadership rotation and regime changes, it can be challenging for an ETF to keep up with the proper holdings to express that factor at any given moment. I would also, I think one of the main takeaways of this video, hopefully, is to always do your due diligence. Don't ever just buy an ETF called a Momentum ETF and expect it to do something that it may not actually be doing. Always look a level below, look under the hood on an ETF. Part of the due diligence of looking at expenses and management fees and all of that. Also look at the construction of the ETF. See how often the holdings are rebalanced. See how they're allocated, how concentrated the holdings are, and also what sort of sector weightings that you have. You'll find in an ETF like this with a huge financial weighting, it may be an unintended consequence, but something you should be hopefully aware of. That's our video for today. If you like this sort of thinking about charting, technical analysis, behavioral finance, market structure, market dynamics, and so forth, I hope you'll subscribe to my channel. It'd be awesome to have you along this ride. Also, give the video a like if you appreciated it. We would very much appreciate that back. Finally, put a comment below the video right here. Let me know, what do you think about the Momentum Factor ETF through the remainder of the year? Worth an allocation or not, and why? From everyone here at Market Misbehavior, I'm Dave Keller. Be well, be safe. We'll talk to you again soon.